You're locked in to the Grain Market Talk podcast. Fast updates, market movers, and the grain news you need right now. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
All right, today is July 17th. I've got Pat and Jaden here with us today. We're going to talk about the grain market. We've got a ton of great things to cover today, some really big picture stuff. How's it going today, guys?
It's going good. Thanks for letting me be part of your deal there, Minor. I appreciate it.
It's always fun to have 3 on instead of 2.
That is for sure. So let's just start with a little bit of what we've seen here, more macro level, very 30,000 foot view looking on this crop, because Pat, over the last few months, we've had a very different change of pace and belief in this corn market, haven't we, from an overall trading perspective?
Yeah, I'll tell you, I think like leading into this growing season, right, in March or April, and if we went back and listened to a podcast or two, we probably could get this indication that I'm about to articulate here, which is, you know what, we as we've gone through this year, we've managed to flex into about 250 million more bushels worth of export business than what wasn't anticipated a year ago for this crop year. So we kept saying things like, look, we're on year number 3 of growing above trend to above trend line yields here in crops here in the U.S. And, while the projected ending stocks is quote unquote comfortable, it's not burdensome, especially again, given the backdrop of growing some pretty nicely sized crops. And then we were saying things like, you know what? Demand is sneaky good. And the last stocks report that came out, Jaden, it solidified that, right? It provided further evidence, that either last year's production was a little bit off or feed disappearance is a little bit better. I tend to think that maybe last year's crop maybe wasn't quite as big as advertised, but nonetheless, the case for building in the bull camp, I argued prior to the beginning of this growing season was a reasonable possibility, especially if we did end up wanting to trade some weather issues and those sorts of things. And so we got a little something going on there, right? We did get D's corn to trade over $5 for a brief period of time early, right? And so we started to have the market started to lean into that thought process. We almost need to grow a trend line or better crop, right? Just to maintain not just U.S. Ending stocks, but global stocks as well. And so for a while here in the last 4 months, we would lean towards, if we're finally going to break out of this 3-year trading range meaningfully, it's to the top side. Well, then we get into the month of June, if you get the crop planted in the Eastern Corn Belt, things start to look a little bit better. And at the same time, we're starting to see a little bit of an increase in U.S. dollar currency, starting to make us a little less competitive on the export front. And, when we took off and flew around the Corn Belt there the last week of June, I kept sort of challenging myself. Well, geez, what would I rather have? Would I rather have the crop in the Western Corn Belt that looks amazing, for June 25th, but trending drier, right? Living on the edge, going into the month of July without the opportunity, potentially, right, for some rain and now heat, those sorts of things? Or would I rather have the Eastern Corn Belt crop that wasn't off to the best start, had some planting delays? You can see some holes in the field out there with, drowned out spots and a stunted, crop around those drowned out spots. And so wondering about, which crop would I rather have on June 30th, right? Ready for July, but doesn't look so good, or looks great and living on the edge? Well, here we are 2 weeks later, and they're both doing pretty good.
And they've both improved, really, from where
exactly
they were.
Right. So the answer is I'll take either one of them, right?
Yeah.
is kind of how it seems like that's turning out. But it would just say that the threat at the time was, right? Like if we can't repeat last year's exports and we do end up, growing a crop that could potentially be 4, 5, 6 bushels above trend, not forecasting that today, but just trying to make the point that if that was a possibility, maybe we take this 3-year stretch of 425 on the bottom side, 475 on the top side, and we break out to the bottom side potentially. How are we going to flex into some additional demand? And so a couple weeks ago or 3 weeks ago, the threat of that possibility was there. And in fact, Dees corn traded under 430 leading up to that stocks and acreage report that I referenced earlier. So here we sit today, 3 weeks later, and it seems as though, fellas, that perhaps the most logical outcome is that while we maybe have taken some top off yield possibility or potential in this crop, given July weather here, and I sure like for you guys to talk about that a little bit, just as it relates, especially to where we thought we were a year ago. So maybe we have taken the top side off of this thing a little bit in terms of potential yield. We probably have solidified ourselves to the point where we're not incredibly concerned about a major problem or a below trend line yield event. So have we scrunched down the yield potential of this crop and therefore also sort of scrunched down the potential for us to trade out of this 3-year trading range we've been in for the last 3 years?
Yeah, Pat, I would for sure echo that. I think we have, maybe stretched to the top side of this yield potential. And I really like looking at crop rating. So if you guys remember last year in the August WAS, the USDA did predict that the national corn yield would be a 188 yield. So when you do look at these crop ratings, the U.S. as a whole, 6% below last year. That's 6% basically below a 188 yield. And the states that stand out, you got Nebraska below last year, Illinois, and Iowa. So we'll definitely be watching that here going forward.
As you start off a marketing year, there's typically your most amount of unknowns at the beginning of the year. When you're getting the crop planted, what geopolitical issues are there going to be? This year, it seemed like it was max everything. You had max potential geopolitical issues,
Sure.
whether it be China trade, whether it be Iran and the situation there. As you develop the crop and become more of a known on yield, which will really narrow that in over the next 2-3 weeks here through the pollination window, that'll become more of an unknown. I would argue our window has now shrunk from, a 188 or 190 even got talked to, or sub 180 is probably like a 182 to a 186 today that we've shrunk it to. So that's becoming a little bit more of a known.
Right. I really appreciate the way that you're saying that, Mike. And great points, Jaden, as it relates to crop conditions, scores, and those sorts of things. But your point is like what resonates with me is like we've all learned through the years that crop, the corn crop, soybeans too, but the corn crop has its maximum genetic potential when it's in the bag, right? Yeah. Before you plant it, and then weather and everything else, environment chips away at it. Sometimes management practices, right? All of those things sort of chip away as we go through the growing season. And the markets are similar in that sense, right? You have the maximum amount of uncertainty before, the growing season starts. And then we start to chip away and start to hone ourselves into a little bit more definition, right? In terms of what that supply is. And not uncommon actually for the markets to react to that.
Absolutely. And Kate, if you pull up a December corn chart and go back to like the first of the year, it's kind of interesting because the way I would sum this up would be on January 10th to 13th through that stretch there where you had that spike low. That was after the WASDE report in January there, right about where his cursor's at. You put a spike low in, and then we never traded below that mark here until the end of May, beginning of June again. Now, we just had a quarterly stocks report that we put another major low in. Now we've traded substantially off of that again. And it illustrates it well because we had max amount of unknown potential in that after that January WASDE there. We started to come into a lot of issues, potentially Iran, oil, crop size, things like that, planning, obviously, which ended up going fine. And now we've started to get a few more rains kind of through that stretch that we saw in the beginning of June, helped push things down. Oil really pulled back through that time frame. Now we've started to pop back up a little bit. And A few of those reasons I would argue is when I look at what a 182 to a 186 yield does, Pat, I see somewhere between a 10% stocks to use ratio up to a 13% stocks to use ratio. You can pull up the supply and demand chart there, the 2 over. That one, right? The one below. Yep, that one right there. You can see, so like a 180 to a 186 yield high and low there, you can see anywhere between about a 10% stocks to use ratio to a 13%. And those are two very substantial key markers as well, because once I get below 10% stocks to use ratio, and the chart to the left of that there, Cade, historically that would suggest price somewhere around, positive $5. It becomes a lot more erratic in that area. Once I get down to a 13%, it's very difficult for corn to really try to be above $4, Pat. And we're really honing this in now that we're probably very comfortable in this range around the middle 4 type area on this corn crop, as long as what we know today kind of ends up staying true from here on out. We're honing that in a little bit.
Yeah, exactly right. And I think the point of this podcast is that 180 to 186, that likely is the outside range in terms of what the potential is, right? And so the highest probability is probably a little bit narrower than that. I would tend to lean towards the top end of that yield potential, just giving credit to the genetic potential of today's technology to deal with the extreme amount of heat that we're dealing here with the month of July. But that's certainly the debate, right? That's what it's all about, right? Is to figure that out. I do think it's also worth mentioning in terms of relatively recent developments. We do have a crop problem developing in Europe, particularly in France and wheat production areas. And we do also have a new round of concerns and issues as it relates to the whole Russia-Ukraine engagement, war, and Russia's challenge as it relates to exporting wheat, and Russia is the largest wheat exporter in the world, right?
Out of all the things I was expecting us to trade the last 2 weeks, that wasn't really in my item. We haven't traded the Russia-Ukraine war in a very long time, so I was very surprised that we actually got to trade that a little bit the last 2 weeks, and because otherwise it's been very consistent that we continue to trade weather, China, and Iran headlines in this grain market for sure.
All right, so we're losing a little bit of volatility here, where we would argue, right? Maybe again, sort of honing in on crop size. Maybe we can feel a little bit better about potential disappearance globally for U.S. corn production in particular, soybeans as well, as when we start to consider the recent positive developments as relates to China. But nonetheless, for our row crop producers, fellas, what's the best way to what should we be thinking about here as we're starting to feel a little bit better potentially about our crop prospects, but what type of marketing strategies should we be focused on for our group?
Yeah, Pat, I really like honing in, see what, maybe, bump up your APH a little bit. Maybe we are expecting, especially here in Minnesota, to have an above APH yield. So start to kind of plan for that. And for bushels that need to come out of the combine, I mean, that's the first priority. That need to go straight to the elevator, using either options or futures I really like today. And the soybean side of things as well. Continue to see demand there from China, continues to keep this market propped up. So really like making sales there around that $12 area.
And with the soybean side too, with some recent China activity lately, we've seen some very aggressive opportunities on the rail side of things for harvest. It looks like October in particular, it's mainly just designated so far to soybean trains. So there are some good pushes that are happening in the Western Corn Belt here today for soybeans coming out at harvest. So that's been a big talking point of mine lately with row crop producers on managing those harvest delivered bushels at a decent futures price today. And actually we're getting basis to come along with us pretty well. So on that front, that's been very important. The December corn, we're still bumping in an area of significant resistance. You've had plenty of moving averages right around 465 here. So we're really trying to break through this 100-day kind of area at 473. I'm going to be watching that pretty closely on December corn here, Pat.
Excellent. That sounds great. Good advice. And just a reminder to everyone out there that would invite you to the opportunity for row crop producers, livestock, cattle, hog producers across the country. We've recently introduced a wonderful platform called Pro Ag Power that allows for us to easily track positions and help you make good decisions for your operation, and would encourage the opportunity for anyone to engage with us and learn about the new technology that's available to help us make good decisions for your operation.
And to get in contact with us, please click the link on the description below to get things like our daily market commentary and other market research info as well, or go to professionalagmarketing.com. Thanks, everyone. Thank you, guys.
Thank you.